So this is going to be a recap of everything that we've gone over so far. So I know there's been a lot that we have gone over. So I think it's very important that we address everything that I've gone over with the building blocks, as I call them, for trading. So the first thing we went over was candlesticks. We need to understand what these look like, what they can tell us, and the information they tell us. So they are made up of two parts, the wick and the body of the candle. So the body of the candle is this kind of gray box here, and the wicks are these blue lines at the top of this. We need to know these aspects for closures above and below highs and lows, but more importantly, we need these wicks so we can mark out highs and lows within the market. So just knowing basically these wicks is pretty important. And really just with knowing what these look like, we can mark out highs and lows, we can mark out these trends, we can mark out everything super easy by just knowing what they look like. And that feeds us right into highs and lows. So highs and lows are a two candlestick pattern that consists of an up candle and a down candle. I'm not going to say a red candle and the green candle because I know some people use different colors. Some people use red and black. Some people use black and blue, right? There's a ton of different colors. So just an up candle and a down candle. So we have a good example of a high right here. We have an up candle, a down candle, and this is also a good example of not necessarily meaning the up candle is the high and the down candle is the low. So like in this case, we have an up candle here, we have a down candle right here, and the high happens to be this down candle because of the wick, right? So we need to understand that, not just marking out this as the high because it's not technically the high yet. And also, we have a good example of a low here. Obviously, the low here happened to be the down candle. So we have a red down candle followed by an up candle, and this down candle was significantly lower than the up candle. So this is clearly marking out a low. So now that we know how we know how the candlesticks work, we know how the highs and lows, that means we can move right into trends. So I feel like I drew these out, but obviously we'll go right in the charts and see all these examples. We have three types. There's uptrend, a downtrend, and sideways, which is called consolidation. So it's important to know because especially on the higher time frames, when we have an uptrend, we want to look for a long position. When we're on a downtrend, we want to look for a short position. And when these consolidation areas, it's kind of hard to see these on the hourly. It doesn't necessarily happen a lot, especially during London session and New York session. There's not typically a lot of consolidation on the higher time frames. On lower time frames, we had a couple days I remember a couple weeks ago where there was a lot of consolidation. So these are the three ways, and I will go in the charts actually right now and show you guys examples of these. So right here we have a good example of a downtrend. So I'm going to mark out all the lows here. Again, a downtrend is when lower lows continue to get formed. So we have this low get formed here. We have another low get formed here. We actually another low get formed here, right? So we're continuing to make lower lows. Now this doesn't typically happen a lot on the hourly time frame. Like we won't see this for an extended period of time. This just happened to be the case right here. So especially if you zoom out, you can definitely see we have significantly lower lows being formed here. And then on the contrary as well, we have these uptrends. So we are continuing to make higher highs. So I'll just mark out the highs here. We have a high get made right here. We have another high get made right here. We have a new high get made right here, right? So we're continuing to push up and form these higher highs. So this is an easy way to mark out an uptrend, the exact opposite of a downtrend. So that's why we need to understand the wicks, and that's why we need to understand these trends, so on highs and lows, so that way we can mark these out, right? So we can easily move through these. Hey, we have a down candle, up candle. This up candle is higher, mark it out. We have a down candle, we have an up candle, down candle. This up candle is higher, mark it as a high. We have the up candle, down candle. This up candle is higher, it makes higher high, so we are in an uptrend, right? So it's super easy to mark out once you understand these. Just going through the charts, marking these out makes it super easy. But then we also have these areas where we have consolidation. So sideways movement. This is a great example right here. I'll just put the rectangle around it, right? We have this area that's kind of just moving sideways, right? No, we don't have a very large price range. This is consolidation, right? We can't really mark out, okay, well, we have a high right here, oh, and then we have a low right here, but then we have another high that breaks it right here, right? So it's hard to see these, right? Because it's hard to make a bias, right? Where do you want to trade? Do you want to go long? You want to go short? Well, it's kind of hard to tell, especially when your higher time frame, the higher time frame, higher power is showing it's just moving sideways, right? There's not a big price range. This is probably Asia session. Yep. So that's just happens to be the case, right? So it's moving sideways, especially on the higher time frames, tends to be a little bit harder to trade. And then this moves us right into break of structure. So break of structure is when a higher low gets completely closed above slash below. And this marks out a break in structure to and then that marks out an area where price is probably going to continue to move. And this is definitely prominent on the higher time frames. So a 1 minute break of structure will never be as strong as a 1 hour break of structure or a daily break of structure. And I remember making this our screenshot right here. This was on the daily time frame. So we see here we have a high get formed here. We get a candle completely closed. That is super important to note. You get a candle completely closed. It's not the wick tapping into it. It's not whatever the case is. The candle has to completely close. And what do? We got a candle close and price continued to move up. We see breakup structure quite a bit on every single time frame. It happens everywhere. We have hourly breakup structure, we have 4 hour breakup structure. And obviously, like I said, these higher time frames hold higher power. So we have a great example of 4 hour breakup structure right here. We have a up candle, a down candle right here. This marks out the high right here, right here, right? And then we get a breakup structure. So we get a complete candle closure above. Price continued to move up. We have a pretty good example of a low. So we have a high, we have a move down, and then a move up. But the move up is actually the lower candle right here, right? We see this here. What do? We got a closure completely below this here, and price continued to move down. So this is why on the higher time frames, this is much more significant, right? When we get a break of structure to one side on these higher time frames, price will continue to usually move in that direction. That is not the case for smaller time frames, however. So here's some good movement on the 1 minute time frame here. This is actually from today, actually. So we have right here, actually, we have this high get formed, or we have this high right here. What do? We got candle closure above it. Oh, price is going to continue to keep moving up. Nope, falls right down, right? So that's why it's important that you have a bias, first of all, in the first place, right? So if your bias is short today, cool. If your bias is long, okay. You can't really judge it on these 1 minute breakup structures. Obviously, like right here, if you try to enter a long position, okay, we got a breakup structure to the upside on the 1 minute time frame, and you try to enter, it's just right, you get a complete closure, you wait right here, you're probably just going to get stopped out, right? And we see that right there. Price was never even in the profit. So that's why it's important that you have more confluences, and that's why we're going over all of these right now because you need to understand all of them. But like I said, higher time frame, higher power, a 1 hour break of structure will forever and always be stronger than a 1 minute break of structure. So the last thing we went over was fair value gaps. So we had two parts of this. Fair value gaps are imbalances within one direction of the market, rather that's bullish or bearish, and they consist of a three candlestick pattern. So right here, I drew this one out because it's a little easier to see. We have a bullish fair value gap. So within this case, we have the top of the bottom wick in red, and then we have the bottom of the top wick also in red. So right here, we have this bullish imbalance that was left behind. So what can these tell us? Well, it can tell us a couple things. These leave imbalances where price wants to draw to, right? So we're going to have movement that farther up. Price is going to want to fill this in fairly quickly, especially on the higher time frames. It will always get filled in. Higher time frame fair value gaps always get filled in. They are complete price magnets, and they will get filled in. So price will always want to fill these in, especially on high time frames, and they can show us where price wants to go. Now, sometimes these can help us with entries when we get closure above or below. I'm not going to worry about that right now with you guys. I'm not going to be going super in depth with trying to explain how to enter off of these. I don't typically enter off of these, not just this confluence. I always have like 3 or 4 other confluences that are actually going on right now, and this is kind of like the final one. But this is not going to be the final step. So I'm going to go in the charts right now and show you guys all of these. Okay, so now we are in the charts. So going to give you guys some good examples of these for value gaps. So just mark, literally just being really good at marking these out. Bam, I see one right here. There's like 3 in a row right here. So we have this bullish for value gap left right here. Bang, got one right here. Bang, we got one right here. Bang, we got one right here. And then on the contrary, we have a couple bearish fair value gaps that are right here. But this just gives you like shows, okay, price wants to close these areas down, right? So we have a bullish one. What did we do? If I draw it across, it got filled in. What did we do on this one? It got filled in, right? Price ripped through it. What do we do here? Eventually, price ripped through this one, right? So every single time, especially on these high time frames, they're going to get filled in one way or another. They're never just going to get left there. On smaller time frames, you can kind of see some of them kind of just get left there, but they will eventually get in, right? So get filled in. So these are important for price magnets. They can help you with bias on the day. If we get a sweep of some highs like right here, and then we get a couple moves down, right, we're already filling these in. So these, I think the smallest time frame one that I will go on is the 5 minute fair value gaps. I'm not very big on, 1 minute fair value gaps, but like we see here is a good example of an inverse fair value gap. So price closing above this. So we have a bearish fair value gap that gets formed right here. We get price close above it and we rally up. We had a very strong move up after we get a complete closure above this. But like I said, these are going to want to get filled in, right? And then on the contrary, we generated these bearish fair value gaps, which ended up getting, or these bullish ones, which got filled in pretty much right away. And this one, we form right here. It's gotten filled in more than 50% of the way. And I'm sure this one's probably going to get taken out too eventually. So that is a recap of everything that we've gone over so far. I have a ton of other videos I'm going to be making on order blocks, liquidity sweeps, all these other ones, equilibrium, all these that are you're going to have to understand in order to be a good trader. So it's important to know a lot of these confluences, even if you don't really use many of them. It's important that you know all of them.